All right, today we're diving deep into SoFi stock, breaking down everything that happened in the market and analyzing what it means for investors. So buckle up because there's a lot to cover. Hello everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But before that, alert, this is not a financial advice video. SoFi just wrapped up the trading day down by 4.4%, closing near the 11.40 mark. The stock had an intraday low of 11.31 cents and a high of 12.09 cents. Now, this might not seem too extreme, but there were some key economic indicators released that should have pushed the broader market higher. The PPI, Producer Price Index, and initial jobless claims came in better than expected, mirroring the positive Consumer Price Index, CPI, data from earlier. Normally, this would be a recipe for a strong market rally, but that wasn't the case today. Instead, external geopolitical and macroeconomic concerns weighed on investor sentiment, preventing the market from responding positively to the data. One of the key stories today revolves around new tariff talks, this time targeting France. The U.S. seems to be eyeing French wine and other imports for potential tariff hikes. While this may not be a major market-moving event in itself, it feeds into broader concerns about escalating trade tensions. Some analysts are warning that these policies, regardless of their scale, could push the economy into recession or even trigger a global downturn. These fears are putting downward pressure on the market as investors react cautiously to uncertain trade developments. At the same time, there's another looming risk: tomorrow's Michigan Consumer Sentiment Index report. This particular economic measure sparked inflation fears about a month ago, and given the market's sensitivity to inflation-related data, investors are closely watching the upcoming release. This is creating a bit of a risk-off sentiment ahead of the weekend. And to add another layer of uncertainty, we're facing the possibility of a government shutdown due to the debt ceiling situation. If lawmakers fail to reach an agreement by tomorrow at midnight, it could lead to a temporary shutdown, injecting even more volatility into the markets. Government shutdowns often create panic among investors, and if this one materializes, it could drive SoFi's stock price even lower in the near term. Despite all the macroeconomic turbulence, SoFi did release some significant company-specific news today. The company announced a $5 billion deal to expand its loan platform business in partnership with Blue Owl Capital. The agreement spans 2 years and is aimed at strengthening SoFi's lending capabilities. This should have been a catalyst for a stock price rally, but the market barely reacted to the news. Why? Well, one reason could be the wording of the announcement, specifically the phrase "up to $5 billion." This suggests that there's no guaranteed minimum transaction volume, leading investors to discount the significance of the deal. Even though this development underscores the strong demand for SoFi's loan products, the broader market had other priorities today, overshadowing this otherwise positive news. Now, let's talk about short interest. The past 2 trading sessions saw a slight reduction in short positions, but today, shorts returned aggressively. Short sellers increased their positions by 157,000 shares, bringing total short interest to 12.22% of the free float. In absolute terms, that translates to 31.64 million shares currently being shorted. The cost to borrow remains relatively stable, and utilization sits at 15.51%. What does this mean? It indicates that bearish traders see further downside potential for SoFi and are positioning accordingly. Shifting to the options market, activity was relatively subdued today. Call volume stood at 7.76 million, matched by put volume at 7.76 million as well. That means 45% of all options traded were bearish. The total options premium for the day was $15.5 million, down from $19.7 million yesterday and $24.1 million the day before. This decline in trading volume suggests that traders are staying on the sidelines, waiting for more clarity from economic data before making big moves. Based on call option strike prices, bullish investors are targeting the $12.50 range, while bearish bets anticipate the stock falling below $11, possibly toward the $10.50 mark. With tomorrow being Friday, open interest data suggests key levels to watch: 4,000 contracts at 11.50 cents, 2,000 contracts at 11, 10,000 at 12, and 15,000 at 12.50. If SoFi does attempt a rally, short sellers might step in to suppress the stock below the $12 mark. Beyond technicals, SoFi has been seeing relatively quiet activity in the secondary market when it comes to large transactions. Institutional investors typically make big moves above $100,000, but today's activity showed mixed signals. Some buying pockets emerged, but overall, large volume transactions were mostly sell orders. There was a major dark pool trade that went through at 1.6 million shares, reinforcing the idea that institutional investors are playing cautiously. Dark pools continue to be the preferred method for hedge funds and large entities to execute trades discreetly, and today's data shows that SoFi remains a battleground stock for both bulls and bears. Looking at support and resistance levels, the key number to watch right now is $11.31, which marks the S3 support level. If SoFi holds above this, it could stabilize. On the upside, resistance sits at $12.72 and then $13.59. A key technical indicator to keep an eye on is the 200-day moving average, currently at $10.86. If selling pressure intensifies, this will be the next critical support level. Additionally, stochastic RSI readings indicate that SoFi is in oversold territory. If positive news or strong data emerges, there is potential for a bounce, but for now, the market remains on edge. The bottom line, SoFi is navigating a challenging macroeconomic landscape. Despite positive company news, broader concerns around inflation, tariffs, government shutdown risks, and investor sentiment are weighing on the stock. Tomorrow's Michigan consumer sentiment data will be a key factor, and if it surprises to the upside, we could see a short-term rally. However, if fears persist, further downside is possible. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.